everybody, so we're going to talk about Opendoor Technology. It had a recent downfall today for many reasons, but let's check out the news in the chart. So one of the reasons why Opendoor Technology went down a lot today is because the interest rate cut was good, but it's probably priced in, and there's some concern about will there be interest rate cut for December. They're saying not sure yet, don't know, but the uncertainty had Opendoor come down some, and also the market. But then we have this news. U.S. pending home sales stall as labor market concerns build. So it seems like the labor market is also pushing down housing stock. So now we have the labor market pushing this down. So we have slowing housing sales, the labor market concerns, and we're not sure if we're going to get a rate cut in December. And also the government is still shut down, and that's concerning as well. And here we are in an article, pending sales of existing U.S. homes stalled in September, suggesting that anxiety about the job market kept potential buyers sidelined despite a welcome easing in mortgage rates. So mortgage rates are getting better, but if the job market is unstable and has uncertainty about it, no one's buying houses. If someone's concerned about their job, if people are getting laid off, no one's buying houses. So that's going to be a big issue. That's probably why we've been going down recently. Government shutdown, people losing jobs, paychecks are missing. People aren't certain about whether they have a job next week because there are concerns in the data about the job market. People are also getting laid off because AI and also robots, right? Amazon just released a lot of workers just not too long ago, maybe a few days ago. So people are losing jobs. Why are they going to buy houses, right? So that's going to be an issue for the housing market and slowing the recovery for the housing market. But as they say here, nonetheless, mortgage rates are trending toward 3-year lows. That's a very good sign right there, which should further improve affordability, though the government shutdown could temporarily slow home sales activity. Temporarily, it seems like a lot of this stuff is going to be temporary. Once things get back on their feet again, the government opens back up, the job market gets better, and the interest rates is already going down, so we don't have to worry about that. Once all that starts to get better, then housing stocks should go back up again. And here in this article, it says Opendoor is up 12.2% after leadership shakeup. Crypto push, AI platform advances. Has the turnaround thesis changed? In my opinion, no. But we still have to see the earnings, which is coming out next week. But as you can see, we're still up 12.2%, even though we had a decline and share price is not really moving that much. We're still up 12.2%, which is good news. And here we have some good news. It says October 29th, Morgan Stanley hikes Opendoor price target of $6 ahead of the third quarter earnings. Opendoor Technologies is one of the stocks that should double in 3 years. On October 20th, Morgan Stanley analyst Matthew Cost raised the price target for Opendoor to $6 from $2. So that's good. Every time you get a price target increase, it's going to be good regardless. Even if it's up only an extra $1 or $2, any price upgrade is going to be good. Morgan Stanley pretty much said the sentiment came ahead of its company's Q3 2025 earnings report, as the firm remains positive that Opendoor will capitalize on its current momentum. Morgan Stanley is prioritizing evidence of GPU-enabled revenue and returns to overshadow narratives and drive performance. They're looking at that, pretty much say that, Opendoor will have a good earnings. And last but not least, before we check out the chart, Opendoor next earnings report is Thursday, November 6, 2025. So that's going to be big. The whole week of November 6 is going to be huge in my opinion. So here we are with the weekly chart for Opendoor Technology. Had a nice green candlestick for the weekly, but then we get a red candlestick for this week, pretty much messing up the momentum from last week, right? But we're not in a downtrend for this weekly candle. We're still up above where the last green candle was on the weekly for last week. So it's a red candle, but it's not too bad because we're not in a downtrend from this red candle. On the daily chart, we are in a downtrend because we broke the support at 775. So that's a big issue. We needed to hold that support at 775. So the goal tomorrow, to me, in my opinion, is to break 775 and hold above it and try to close above $8 again. That's what we need to do. If we can hold above $8 until the earnings for next week. That's going to be good, and hopefully the earnings is good, and then we can take off and rocket from the earnings. And as you can see, the hourly chart looks horrible because this is where Jerome Powell started to talk in the press conference at 1:30, and the news that he gave wasn't really good for the market in general. It wasn't too bad for AI tech stocks because they have huge earnings and they are doing really well. Housing stocks, not too well right now. So we needed Jerome Powell to say some positive things, and didn't happen, and it really affected the housing stocks, all right? And it just went straight down. After hours is holding the 750 area. Some people are saying this is going to $6. I don't think so. I don't think it's going to $6 at all. I don't think it's going to $6 area again at all, because we hit $6.23 not too long ago, and we really went up high from there. Went from 623 all the way up to 858 area once we hit that support area. So that was a good sign, of a strong support, because we catapulted from 623. If we go any further down, it look like the 725. That's the farthest I see it going down, 725. But tomorrow I'm hoping we go above 775 again in the $8 area. But the support at 725, I think, is strong enough to hold us until next week earnings. And then if the earnings is good, let's catapult up to 8 and try to break the 885 at $9 area. But the earnings have to be good. It just has to be good for that. We don't want to see any downside in earnings, because if it does, what could happen is that we could go to 725 and possibly hit the 6 area with 650 to $7 area and trade sideways for a while until we get some good news, right? But the $6 area, I've been saying it for a long time, has a lot of support. The $6 area, 625 to 650 to 675 is a lot of support in the area. So going to $6, I think will only happen if the earnings is bad. If the earnings is good, it could go to $8, $9, $10. The earnings is bad, probably hit the 625, 650 and trade sideways for a while until we get some good news. That's just my opinion based on the chart, right? Based on the chart. So my opinion for Opendoor, we just need some decent earnings. We're not hearing a lot of news from the company in general, and the overall situation for the housing market isn't that great. So we don't have a lot on our side. So that means earnings need to be good, right? Need to be very good. Thanks for watching. Subscribe, like, and comment. If you want to know more about Opendoor Technology, join the Discord or subscribe. I do Opendoor analysis all the time. Take care.